Coca-Cola is reporting their earnings right now. Let's see how they do. This is the moat of all moats. You go anywhere in the world and you say Coke, somebody's going to hand you a Coke. Let's get into their numbers. Let's go. All right, guys, Coca-Cola has reported, listen to this, earnings per share beat 68 cents versus 65 cents. Revenue came in $10.96 billion versus $10.8 billion. That's a beat, top and bottom line. I was doing the morning show this morning and I was astonished by they're still projecting 3 to 5% revenue growth. For a company that's this big and this ingrained, it's absolutely amazing to me. This is one heck of a brand. I mean, talk about the moat of all moats. You go to third world countries, fourth world, fifth world, 10th world countries. If you say Coca-Cola, people know what Coca-Cola is. You might say iPhone and people don't know what that is, but you say, I need a Coke, where can I find a Coke? You're gonna find it. Every time I go to Egypt and I'm kind of in the middle of the desert or something, and I'm just like, I need a Coke, and it just happens. It's absolutely amazing to me. But price reaction, they're up about a 0.5 percentage point right now. Let's get into their press release. So I'm gonna pull up this report from CNBC first. I just wanna point out a couple of things that showed here. Net sales rose 5%. That is awesome. Now, organic revenue, and this is in the press release, organic revenue, which takes out acquisitions and divestitures, rose 12% in the quarter. That is unbelievable. Now, let's look and see where we had the big growth from. North America, flat. Europe, flat. Europe, Middle East, and Africa fell 3%. Demand in Latin America and Asia Pacific, however, that's where you got the big climb from. And it is kind of quarter to quarter, it kind of sways and moves in different directions. The zero sugar part, and I think this was completely driven by Paul and Tim, was up 8%, zero sugar Coke, so that's good. Water, sports, coffee, so they own Bon Appetit coffee. I have never had it, but that division was up 4%. Coffee business alone was up 9%. Water division rose 5%. That's Dasani, etc. Now there's sports drinks. That shrunk a little bit. Let's go over and see what they did. Revenue grew 5%. We mentioned that. Let's see. Operating margins, 30.7% versus 32.5%. Now that is something that we want to pay attention to, and not only in Coke, but in all of these industries. What is happening to these margins? Are they going to start to climb again? That's the big thing. This one fell compared to the previous quarter, but we'll see what happens in the next quarter, as a lot of their growth on the revenue side came from increased prices. They said that in this report. So let's see what happens as they either leave prices there, start to bring them down. What happens to those margins? Market share. Company gained value in the non-alcoholic ready-to-drink beverages. I wonder what happened to their Jack and Coke, because that one released. I remember that was such a big deal in the news. Saw one in Giant Eagle this weekend. Let's see here. Where can we find anything about Jack and Coke in here? Sparkling soft drinks grew 3%. Yes, here's the decline of 3% in Europe, the Middle East, and Africa. The Latin America grew 5%. North America, well, so I mean, now the outlook. This is the important thing. This is why you're seeing the positive price reaction. I mean, not only did they beat, but the positive price reaction. They looked to keep all of their expectations into 2023 the same. You're seeing a lot of companies start cutting them. We're not seeing that with Coca-Cola. No change. Company expects to deliver organic revenue growth of 7 to 8%. No change. Revenue. For comparable net revenues, the company expects 2 to 3% currency headwind based on current rates and everything that's going on in the economy. So let's get into Coca-Cola and look at some of these numbers. Now, this is one of, I mean, people say Disney's a moat, Starbucks is a moat, eBay's a moat. This to me is just the moat of all moats. They do pay a dividend. People love that. It pays about $7.62 billion, and typically I'll see 7.62 out of a 5-year free cash flow of 8.79 and say, oh, that's a lot. But again, I don't know. This is Coca-Cola. What else are you going to do with your money except for reward your shareholders? I guess we'll look at their share buybacks and we'll get into that. But it doesn't scare me like it would if it was a smaller, less mature company. Now, gross profit margin of 58.1%. It doesn't get much better than that. The only thing that kind of gets me here, PE and 5-year PE, a little bit rich, but we'll get into that a little bit more. Market cap of $277 billion, enterprise value of $332. The difference is the debt. Now, I wanted to talk about shares outstanding. What are they doing here? Oh, interesting. So they were buying back shares, and then they started increasing their shares slightly. From 2019, they've added not that many shares. It's not significant, but maybe instead of paying out that massive dividend, maybe you start rewarding some shareholders. Now let's look and see what happened with their revenue growth. So what I'm looking for here is I want to make sure that from 2019 to 2021, in this kind of span, we didn't get some incredible jump in revenue based on people staying home, buying more Coca-Cola, who knows. But we didn't see that. We actually saw 33 billion, 37 billion, 33 billion, 38 billion, 43 billion. So they are hitting revenues that they were achieving back here in 2015-16. So returning to those revenue numbers, I'm going to go look at the cash flow statement real quick, make sure I'm not missing any types of major acquisitions. So they do some acquisitions. 2019, they did a big acquisition of $5 billion. 2021, another acquisition of $5 billion. So that could be, and then they've also had a couple of smaller divestitures, $385 million, $99 million, I guess nothing massively significant. So definitely more acquisitions and dispositions. And that's why in their press release, they said organic growth, not including any types of acquisition. So I like that they really specified that. 5-year average free cash flow of $8.79 billion. Now, let's see here. Let's go back a decade. 8 billion, 8 billion, 8 billion, 6.5, 5, 6, 8.5, 8.5, 11.25, 9.5. And they paid out how much in dividends? They paid out 7.62. Okay. I guess I can roll with it, I guess. It is Coca-Cola. Now, let's see the 8 pillars. So I don't have any of my pillars put in here, but guys, if you get the software, the great thing about this, you can put in your pillars. So if you want to find a 5-year ROIC greater than 12%, well, you would have a check mark. If you want greater than 15%, go for it. Greater than 50%. You can change. There are tons and tons and tons. I mean, I think there's trillions of different combinations that you can do in your pillars. Join the software, $39 a month right now. You'll love it. You'll absolutely love it. All right. So right now, the debt is a little bit much. I mean, it would take them 5.37 years to pay off their long-term liabilities with their 5-year average free cash flow. Shares outstanding, I'm not super worried about. Let's see what the analysts have to say. I would venture to say that they would see, and the return on invested capital is almost 15%, solid. So we're seeing mid-single-digit growth, maybe to upper single-digit growth over the next 5 years. But pay attention to this. There's only 4 analysts predicting out into 2026 and 27. And on the revenue side, we're seeing about 5% revenue growth over the next couple of years. So nobody's really putting their neck out on the line there. So I'm going to go here to Stock Analyzer tool and try to put a price on Coca-Cola. Now, a couple of things that get me. I want to pay attention to the dividend if I'm going to do a deeper dive in here. I don't think it's going to take me very long to figure out why they're paying that big of a dividend, why they're not buying back shares. I'm sure that they're very explicit in what they're saying. The debt levels, not terribly concerned. Labor, capital intensive business, I'm not super worried about it. The thing that I want to know is that revenue growth going into the future going to be there? I do think on a surface level of thinking, yes, it is going to be there because it's such an incredible moat. But let's put in some numbers here to find that out. So I'm going to go with 2, 5. I'll go 2, 4, and 6. I think 5. It's not that 5's a little bit high. It's if I went with 8, that would be a little bit high. So I'm going to go 2, 4, and 6. Profit margin seems pretty consistent. I'm going to go 17, 20, and 23. Free cash flow margin, I'm going to do the same thing. 23. PE. Now, they have a moat. I'm going to go 15, 17, and 19 because if they can achieve 6% revenue growth for the next 10 years, yes, I'll give them a high PE, seeing that they have a really high ROIC, they have a really great moat. I'll give them that. I'm going to do the same thing over here. And for my return, I'm going to put in, You know what? I'm actually going to put in 9%, 11%, and 13%. And the reason I'm putting in 9%, lower than the market average return, but 2%, I think that they can do better than 2% revenue growth over the next decade. So let's hit analyze. It's on my watch list for 35. Let's see what that means. I haven't done this one for a very long time, but I'm seeing about 25 to 40 with a middle ground of 31 on my watch list at 35. And I guess my analysis remains consistent. I bet you I did this one 6 months ago. So that's Coca-Cola. Great brand, great beat. Let's see what they do into the future. See ya.